Good evening and welcome everyone to our inaugural AGM. Thank you very much for joining us. A special thank you to our shareholders, without whom this would not have been possible, as well as our investees, again, without whom this would not have been possible. I would also like to give a special welcome to Kuya Kwabe and her matric class all the way in Swaziland. We received a special request during the week where Kuya asked, can my class join the AGM? Because in our economics class, nobody's exposing us to these things. And I thought back to a very youthful self. When I think my first AGM I attended, I probably was on the other side of 25. And I think when I saw that, it warmed my heart because it speaks to the very essence of what we're trying to do with T1C to expand the investing landscape as well as participation in areas that were previously not allowed to. I'm Lesegisha Mthiyane. I'm the chairman and CEO of Thousand1000 Capital. On the panel today in the AGM, we've got our Chief Legal Officer, Tokyo Ndlela, as well as our Chief Investing Officer, Small Businesses, Nompumelelo Skosana. In front of you, you have the agenda for the meeting. Thank you very much for joining us. We look to make it a very short meeting so that you can get back home and avoid the traffic. That is actually an old joke pre-COVID, especially because we are virtual. Those of you that are watching from the office, I guess the joke still does apply. I'll jump straight to the founding. And I think this picture that we have, if I can get the technology to cooperate, this picture that we have in front of us illustrates very perfectly the journey of Thousand1000s and its founding. It's been a very long founding journey with a lot of different fathers, mothers, a lot of different origin stories, because you know those cold feet that you get before you start anything, you discuss it with various people and eventually you get the final push. And I think that's what I'm going to highlight now in the next slide. In the next slide, these were the key milestones in our formation. Bottom right, you'll see there are two books, The Fortune at the Bottom of the Pyramid, Eradicating Poverty Through Profits, as well as The Third World, South Africa's Hidden Wealth. Interestingly, The Third World was written in the 80s. And those were books that have always fascinated some of us, how people that live on $1 a day are able to function continuously. And when some of us got the opportunity to get a bit of university education, we sought to explore solutions to such problems and how we can make them apply. I think The Third World was particularly warming to discover, as well as how long ago it was written, because it meant that then one was applying solutions to a known problem and they wouldn't have to start from scratch. If I can speak to the picture then on the left, I think 2 or 3 years before Thousand1000s was founded, in passing at one of the JSC events, I said to Christian van Heerden, you know, I'd like to found a company that invests in township businesses. But the unique feature about this company is that we are trying to get us to put our mouth where our money would be. And the reason behind that was that we feel very strongly that we need a lot of professional expertise in townships. If we can professionalize the township again, we can see a lot of problems start to disappear. And 3 years later, sitting at one of the JSE events, Christian unannounced stood up and said, I'd like to welcome Lesegisha. He's the founder of Thousand1000s, and they are investing in township businesses and applying their skills there. It was very heartwarming because she had quoted me verbatim what I had said to her 3 years earlier. And I think that was the first time I sat in a room and got to see how big the mission we had embarked on was. 13 days later, on the right, you've got the founding team of Thousands, Bafana, myself, Njabulo, Tokyo, Njabulo as well, and then hiding strategically from the camera, our very own chief investment officer, small business, Nompumelelo Skosana, and in absentia, Samuel Devota. Interestingly, that picture was taken 10 days before the hard lockdown by the president, and it was taken exactly a year after we had started working with each other virtually. And it was the first time we were meeting each other to record an episode for ignorant millennials that had stumbled upon our story and what it is we're doing. And they thought, perhaps let's put this on YouTube for future generations to know where Thousands was coming from. So you can already tell from the get-go that we started right in the heart of small Black businesses that were profiling each other. If I can skip the slide, I think I'm a bit faster in the technology and go straight into the results. The thinking behind the presentation of the results in this manner was to say, let me have a conversation with you, our shareholders, with you, our stakeholders. And so I phrased it in question format, and the very last part there, I put it for our accountants. It will make sense when I get there. And the idea was to explain, if you read the annual report, which is available on our website, where did the money go? And you will see, as of 31st March 2021, that column there, we had taken no external investments, and we were working solely from investments that were made by the founding team, the guys that you had seen in the previous slide. At that time, we had invested almost 40,000 Rand in township businesses, 24,000 Rand on the JSE via Easy Equities, and we were sitting on 38,000 Rand cash, which was waiting for new investments, as well as 13,000 that had been spent on operational expenses, variety of things from setup costs to bank charges, you name it. A year later, what we had invested almost 3 times what we had invested the prior year in township businesses, 101,000, which we thought was fantastic. We had invested still 24,210 on the JSE, so we hadn't touched or increased that investment. The reason being, we actually wanted to then move a lot quicker towards our mandate and to pause the JSE investments. Again, if you read our annual report, as well as for our shareholders, our welcome booklet, you will know that the JSE investments are in essence our diversification leg. As well, we still had not made any property investments. I think that speaks more to the nature of property. It is a lumpy type of asset class, and we felt that we can make a lot of headway in the other asset classes until we've built up our shareholder base in such a way that we can then go into property investments. I'll speak to that more in the risks that come later on. And then our cash balances reflected respectively, leading us then as well to have increased our operating expenses. To note, again, if you read our annual report, in this year in particular, a lot of our operating expenses related to upgrading of our website, as well as a few marketing expenses that we had embarked on. So don't read into the relationship as a linear increasing relationship. There was a special circumstance that led to our expenses increasing drastically. That's just what happened to the cash that came in and then went out. But now, what is the value of that cash as of today? But before I get there, I'll just compare quickly. This is what we should have done based on our proposed methodology of putting 50% in the township, 30% on the JSE, and 20% in property. Had we stuck to this methodology, as you would know, due to the timing of investments, some investments we can go into immediately and others have to wait for time. And while you're waiting, you miss some opportunities. And as a result, you wouldn't necessarily be able to get the investments that you would have been exposed to maybe a few months earlier. But had we stuck to the methodology and all opportunities came in at the same time, what would have happened is that instead of 100,000 Rand invested in the township, we would have invested only 90,000 Rand. And instead of the 24,000 that we invested in listed equities, we would have invested 54,000. Then the property investments would have been 36,000. And again, in this euphoric world of ours, there would have been no operating expenses and everything would have been functioning the way technology was promised to function, you know, to remove any unnecessary costs. The last table here is the one that I say is for the accountants in the room. And that is a pro forma market value. And you will see now on the next page, the market value of T1C as of today, or as of the 31st of March, 2022. Pro forma merely entails that given how we did invest the money, i.e. 101,000 in the township, as well as 24,000 on the JSE, what then should have been the market value? And you will see that the market value should have been 83,000 Rand for the township businesses and 50,000 Rand for JSE investments. Again, pro forma, if you're not getting it, it's for the accountants. I hope that gives you a little shout out as to where you guys feature in our business. I'll go then to the next slide. Our next slide reads results continued. And here what's important to note was we wanted to then say, but what does this mean for me, the shareholder? It was a wonderful discussion that we had in the previous page as to where the money went, and the accountants have got their little laugh. Now it's our turn to speak to the shareholder themselves. As of 31st March 2021, the shareholder would have held an asset that is valued at 14,239. And as of 31 March 2022, our shareholder would have held an asset that is now valued at 21,770. Now you will see from the market values up here that a huge bulk of that comes from the listed equity, our diversification arm, and we'll discuss that later. If you remember in the previous slide, we had only invested 24,000 Rands on the JSE, and that 24,000 Rand had grown to 43,000 Rands by virtue of dividends, as well as capital appreciation. The 100,000 Rand from the previous page stays the same, and that is because we're not revaluing our assets. We're just keeping them at the cost or the cash cost that we had invested in the township. To revalue them would be a cumbersome exercise, and given the changing nature of startups, would actually be a waste of money, because today you value the company at 1 million, tomorrow the business doesn't exist anymore. Or vice versa, you value the business today at the 5,000 Rand that you invested, and tomorrow it's valued at a million. So we thought it's more prudent to keep it at cost, and then through further engagement with the investors and the investees, over time we'll revalue those businesses accordingly. Then the last is just the pictorial representation of where the money is invested. Again, 61% is in township businesses, 26% is on the JSE, 13% is in cash. Again, this is as of 31st March 2022. and we are sitting on 0% in property investments. If I may go to the next 2 slides, and then there will be an opportunity for questions as we go. I do note there's a red button in the chat. Now, the following slide speaks to the risks that we face as a company. And we have divided them into 2 different types of risks. We face business model risks as well as inherent risks. Business model risks speak to the way we have decided to carry out the vehicle and its activities. And inherent risks speaks more to this type of industry, the venture capital industry, seed capital industry. What type of risks do we face just by existing in that market? And if I can actually start with the inherent risks and then come back to the business model risks. So when we speak of the inherent risks, one of the most common ones that we have found is a trigger shyness. Trigger shyness exists when you and your friends decide to put money together to invest in businesses. As time goes, the money grows and it becomes so big that you actually become afraid to invest it. Now, every investment you look at has to be extra safe and has to guarantee that it's going to return you 50% every day. And you end up not being able to actually make an investment. What tends to happen then, squabbles occur, and you end up either returning the money as it was, and you basically have used the vehicle as a glorified savings account. The next risk that you face is what we call barbell returns. Barbell, for those of you that go to gym, essentially there's a bar and then there's the weights on either side. Barbell returns, in essence, entail that you invest in a business and for very long periods, nothing is happening in terms of the valuation of your business. But what's busy happening in the background is that the entrepreneur or the business owner is trying a whole lot of activities, a whole lot of go-to-market strategies in order to finally have the overnight success. And when that happens, you essentially then get lumpy type of returns. The barbell returns phenomena has also informed why we have a 10-year lock-in period for our investors. And the idea is to give the investments an opportunity to do what is necessary for them to become successful. If I go to our business model risks, and again, this speaks to, again, if you read our annual report, what we're in the business of doing. Just for the ability to have this conversation, I will reiterate. So you have a shareholder, a potential shareholder applying to be a shareholder. They go through a risk model that determines if they would be able to sustain investment in thousands for the next 10 years. And then they get accepted to being a shareholder, and they then get an invite, of which once they have accepted an invite to be an investor with thousands, they will be furnished with a share certificate. From there, that money gets collected and then gets invested in investees. The investees are asked a questionnaire that primarily focus on, are you solving a problem in your environment? The questionnaire also focuses on, do you have some idea of how big the market is, as well as the role that you play in the market, how long it will take you, or what size of the market you will capture over how long a period. The last question that we're interested in is the investment that we're about to make in you and your business. Will it help you in getting closer to capturing a bigger piece of that market? And so that then brings us to a variety of risks. But as I finish off, from that application, we get Fortunate, who calls the entrepreneur, verifies 1 or 2 things, and then upon Fortunate's thumbs up, the entrepreneur has been accepted. We receive the bank details and we make payment to that entrepreneur. The last leg in that business model is that come reporting period, we then source information from the entrepreneur. How have you been doing? And then we report that to you, our shareholders. In the same time, we also go through the books, our bank statements, our bank accounts, and we make sure that every cent that has been received has been accounted for. And that is why you will see the slide that I presented earlier was in simple terms. Where did my money go? We have accounted for every cent, and I think that's a point of pride on my part, as well as our lawyer sitting in this session. So what risks then do we face as a result of that business model? So there are risks that we thought of at the beginning, and these reflect the risks that we have now experienced through our practice of investing, collecting and investing your money. Firstly, is the number and quality of shareholders dictates the speed and size of investments. So we've had situations where an investment is sought, we don't have the amount of money required, and we maybe have to wait a month or two for the cash to accumulate so that we can make that investment. Why quality of shareholders as well? In a situation where you've got investors that contribute and then stop, that would impact our quality of investments that we can go into, because it affects the reliability of our cash flows. Luckily for us, with the new investors that we've had, none have skipped a month. And again, we'll touch on that perhaps in the Q&A. The next one is the time taken to onboard investees. Again, by nature of the environment, but as well as the business model, the fact that you fill in an application and we have to get back to you, it happens sometimes that it takes a bit longer. And I think at this AGM, I would like to make that petition to our shareholders to say, in the long run, can we perhaps look at making Fortunate's role, even if it's not filled by Fortunate, a more permanent role? For those of you with the welcome booklet, which are our shareholders, you would note that we have tried to avoid having full-time employees so that as much money as possible goes to investments and not to fees along the way. Given this critical role, however, we have found sometimes that someone applies for funding, say in January, and maybe because Fortunate is part-time, because of the nature of reaching people in the space that we do invest in, by the time you're ready to make the investment, the investee has actually either already given up or has moved on from the business. And that's one of the business model risks that we face, the time that it takes to onboard investees. The other one is the fact that over the long term, the quality of investments will determine our returns. Again, due to that barbell strategy that we face in the industry, venture capital by design tends to have almost 90% of the fund losing money, and then 1 or 2% of the fund generating the bulk of the returns, which cover more than the money that you've invested. And then the remaining about 6 to 7% of the companies, in essence, just return on average what you would get in the JSE if you invested in an ETF. And so over the long term, the quality of investments will determine our returns. The last one is the quality and mechanism for reporting. Similar to the time taken or the business model that I made you aware of, we have found on occasion that the quality of information that we receive from our investees sometimes needs assistance. And some, not necessarily because we're being managed, but because of the newness of the vehicle, people are guessing what type of information we're looking for. The language of financial reporting doesn't come as naturally to them as it would to a more established and more formal business. And so over the long term, we are interested in making sure that the reporting mechanism is in such a manner that it is standardized, but not just standardized for the sake of reporting, standardized for the sake of giving us qualitative information that will better be able to support our investees. Now, if I go to the responses and future outlook, before we then go to the questions and answers, the responses that we've embarked on in response to our identified risks, we have partnered with global shapers, and they, what do they call it? They pat themselves on the back as building a movement. They believe in a world where young people are central to solution building, policy making, and lasting change. And to that regard, they are a community of incubation hubs all over the world. The one that we have partnered with has relations to the United States. And what they're doing is helping us with the business model risks, helping us see where we can innovate, as well as introducing us to the technology to innovate those parts of our business models that can be handled by automation. So a very comprehensive partnership in that regard. I myself get homework, I attend classes, I engage with the team, and we see how we can incorporate first world solutions to our third world vehicle. The last response and most immediate organization that we're working with is the Africa 80. And as stated there, the Africa 80 is a foundation that tries to organize, amplify, and capture the voices of 20 million young Africans. And the reason we chose Africa 80 and we partnered with them is because we would like to have a situation where our entrepreneurs not only grow in their townships and in their businesses, but actually see themselves as African businessmen that can solve solutions in other parts of Africa. And we've had the fortune of sitting on the board of Africa 80 on a transitional basis. We've sat in some of their meetings where there are presenters from Sierra Leone, Nigeria, you name it. And you can hear that the solution that we have as Thousands resonates on the ground with those countries. And we think that it would be a huge oversight if we thought that the business market is only the South African township. The African townships and African rural areas are also available to our entrepreneurs as markets for their products, and would like to inculcate that type of global thinking. That speaks to our responses to our risks, as well as, if I can just touch a bit on the future outlook. The future outlook as things stand, as stated in the previous slide, we rely very heavily on the quality of our investors. That creates a pipeline of capital that enables us to go into any situation possible. And to that end, we're very confident that the more people engage with our solution and engage with us, the future does indeed look bright. In terms of the minimum amount of investors it has taken for T1C to be able to operate, in fact, there's been periods where there were only 2 or 3 of us that were investing, and the business model is so people-light that at that point we still were able to invest with 2,000 to 3,000 Rand a month. And I think that speaks to the nature of the environment where we're investing, where any little bit of money sometimes does tend to go a long way. So the future does look bright because the entry level is quite low, and over a long period of time, we don't foresee Africa running out of problems to solve, but we do hope that we can make the future more difficult for future entrants in that regard, as a lot of the problems that exist will have been solved by our investee companies. That then concludes the results presentation, as well as the annual report type of discussion that I would have presented to you. I now will go to the question and answer session, where you can ask any one of us your questions, and then we can wrap up after that. Thanks. I'll maybe start in the chat box, and I'm not sure if I can get assistance. So in the chat box, I see our Chief Legal Officer has posted our annual report. Thank you for that. And then I see we have a question from Mokhatla Lukolwane. She asks, Oh, she says in grade 1 English, please also explain how shareholder loans work. Okay, I will do that. Oh, I am he. Sorry about that. And then there's the question of what debt tools have been considered to contribute to capitalize on arising opportunities, as well as reducing a dependency on investors. So, Mokhatla, in terms of reducing dependency on investors, we actually intend to take equity and invest alongside our investors. It's not a dependency per se, it is our business model. We are looking for partners to partner in the township. As you can see, it says 1,000 investors, 1,000 opportunities. And if you read further, we're looking for young professionals. And the reason that is so is because if you had missed the beginning of our presentation, we wanted to put our mouths where our money is. And if we've got investors that are investing in the township, then it will increase the likelihood of them applying their skills and their professional expertise in that environment. So we're not particularly looking to reduce dependency on investors. In terms of what debt tools have been considered to contribute to capitalize us, I think that therefore that was answered by that question. But the idea is to avoid needing to take out debt on our part. That, again, it speaks to the business model and the environment that we're operating in. Remember, our returns come from dividends as well as share capital, either on the JSE or from our investees themselves. If we then put capital in our own capital structure, so say we take a loan from Ntabeleng, her bank, which we support when it comes online, we take a loan from her, and then she comes to us a month later and says, the 100 million rand loan that you've taken from us is now due. It will force us to then go to our investees and put undue pressure on them to return dividends or to prematurely sell a business that needed perhaps a longer lifeline in order for us to pay back Ntabeleng with her wonderful bank. So we're trying to avoid debt, at least at the mother company level. So I hope that answers you. In terms of the shareholder loans work, and I'm going to keep a very close eye on our lawyer because that's information that we've made available to shareholders. Be that as it may, we do mention it. So a lot of consultation was done when we formed the vehicle. As stated, this was about 2 to 3 years in the between the ideation and eventually having that meeting where you saw the 8 of us for the first time. And one of the things that we considered when we were looking at, remember, when you buy an investment or an asset, especially in the open market with equities, there's a base cost that is attached to that vehicle. And you will note that, for example, with the market value that we have calculated per shareholder for our vehicle, that would happen essentially on an annual basis, but your contributions happen monthly. The problem that creates, especially for tax purposes, is that at any given time, the exercise of calculating the base cost in which you entered the investment then becomes fuzzy, and it makes it near impossible for you to calculate your capital gains and or your profits later on. And I can already feel that I've veered away from grade 1 English. But again, I'll try and salvage that horse. In essence, it's a tax mechanism to assist our shareholders, but as well, it was also to facilitate each shareholder being able to continue to contribute while enjoying their right as a shareholder to vote in meetings and what have you. So a shareholder loan is an internal instrument that gives the shareholder right to 120,000 shares before they have made 120,000 rand worth of contributions. So that's that, and I hope it answers you, Mokhatla. I think what I'll do is I'll exit the, okay, thanks, he says thanks. I'll exit the PowerPoint mode just so that I can be able to see the hands that that are going up as well. I see Kat says, for individual investors, what are the risks involved in investing with T1C? So Kat, we only do take individual investors. Our risks have been discussed or at least fleshed out in the annual report, as well as those ones that I have indicated in this presentation. But just to touch on a few that I, again, every time I go to bed, I try and think of. The inherent risk that you do face, Kat, is that as a shareholder, your return is coming from dividends as well as capital appreciation of the investees that we have put our money in. So primarily, if they fail, your money is at risk, as well as if they never pay dividends, your money is at risk. Again, that's why we have a lock-in period for 10 years. And the idea with the lock-in period is to be able to give the investor a fair chance to make their business successful. And so those risks then start to get mitigated. Some of the innovations, as pointed out, was partnering with global shapers. And at our exec meeting, actually 2 days back, prior to this annual meeting, one of the considerations that are very high on our priority list is including a requirement that says once we have invested in you, you should then join an incubation center. So one of the practices that we're engaging on is partnering with incubation hubs with a view that once we've invested in somebody, they can then get the necessary business training, business coaching that does come with being associated with a hub. The benefit that that also gives us, as I did mention, is in one of the business model risks, is that it enhances the quality and the mechanism of reporting. Now, instead of us needing to come up with a criteria that a business invests reports on, the incubation hub can essentially say that out of all of our entrepreneurs, this is what we expect. And then we can then look at that and say, if our businesses are meeting the requirements of that hub, we would then like to report on the extent to which our portfolio is compliant with the requirements of the respective hubs that they are developing with. So that's that. A key distinction I'd like to iterate in that regard. So the conversation that we had was, but doesn't that then go against you wanting to go into the informal space? Doesn't that create a hurdle? i.e., you say you're looking for informal businesses, but then you then subject them to a hub. We are not saying to you that before we invest in you, you should belong to a hub. So it's not a hurdle. We are saying to you, after we have invested in you, we would highly advise that you belong to a hub. And that's because of the value add that comes from that. So we still are investing in the hustler on the ground. We just want to plug that hustler because we have encountered or we have realized that over the last 18 months or 12 to 18 months that we've been investing in businesses, it is an unfair expectation to expect to give someone money and to continue hustling and still meet your high requirements. You're not being true to that investor. So we have then introduced, or at least in the final stages, obviously, unless our shareholders in this meeting say that that is something that they don't want, then that's the last step that is left for us to decide whether we're going that route or not. But in terms of the risks involved with T1C CAT, it's the rate at which businesses fall out. And I think you would know the statistics, 95% of businesses fail in their first 5 years. So that's the risk that ultimately you would face. And then the safeguard that we have tried to mitigate that risk. Mokhatla, I think you have stolen everyone's keyboard because it's your question again popping up. I don't mind at all. Mokhatla asks, how often are food stewards sent into townships to identify viable business opportunities? As of now, Mokhatla, we don't have any food stewards. And that's one of the business model considerations that we had mentioned on there. There is a play, where on the one hand, you would like to invest as much money of the investor that you get in the township as possible. On the other hand, you would like to do what's necessary to get the type of opportunities that are available. Now, you'll know that South Africa has got an up to 75% smartphone penetration rate in the townships. And then from there, various amounts cascading down in terms of social media, as well as access to our product, which I think is the underlying question that you are asking. And as I say, those are some of the things that we're working on. We've even considered starting, especially now that we've got a track record, getting sponsors that will sponsor particularly that sort of thing. But the other thing that I did say that we are embarking on is the partnership with incubation hubs. We will also be investing in the product that comes from incubation hubs. As you would know, South Africa has actually got a very strong network of incubation hubs. And I think that's why we came with the unique offering. Aisha, I have noted your hand. That offering being, there isn't really a lack of development spaces. Perhaps the challenge is accessibility more than availability. And from what we found with a lot of the incubators, they will develop your marketing skills, they will develop your bookkeeping as well as your product development. And the last leg that would be missing, not many incubators then are able to invest in the products of incubation. So you have a lot of hustlers that maybe dropped out of school or avoided going to school, now in the predicament where they sit with a certificate from an incubation hub. And what then happens there? And we're seeing that again, in terms of increasing our quality of investment, that is another place where we think we will take a huge share of the investments too, in that regard. And then when it comes to food soldiers, as I said, we'll probably look the sponsorship route and look to find other ways before we start adding overheads to the business model as is. Okay, I think before I take Ahish's question, I will take a compliment from a Pete Rahwale. It says, thank you very much for the feedback on T1C current performance. This was highly appreciated, given that it's not many organizations that provide feedback to its shareholders, as well as due to COVID-19. Thank you very much for that, Pete. Reporting is actually a very strong part of our business model. We would not like to go on and on and on and on, exercising our business, never then reporting to our shareholders what actually is happening with their money. Ahish, I'm now going to ask you to unmute and then you may ask your question.
How's it more? Firstly, congratulations to you guys. I think you're doing a wonderful job with T1C. I'm sorry if I'm going to ask a question that you probably touched on earlier. I joined a bit late, but I just wanted to know what's your split between, the asset classes that you invest in, and number two is how do you identify these private businesses? Like, what's your investment process? What's the checklist? Yeah, thanks.
All right. Ahish, thank you very much for that question. For a bit of background, Ahish is an asset manager and one of the good friends that had some input when we were designing these tools. And so that question is highly appreciated because it continues to make ourselves robust for our shareholders especially. However, Ahish, you're asking a question that I did touch on at the beginning, so I have to fry you back there. My friend. So the split between township businesses and our various asset classes, we're investing 50% of our money in the township, 20% ideally in township properties. And what has happened since formation, we have discovered because of the high hurdle rate in terms of capital to invest in property, we essentially have been investing 70% in the township. And have decided or have surmised that property, especially a property business, it does not escape the definition of a business. So if a township entrepreneur that is running back rooms, so let's say Airbnb, Kosoweto, Komabopane, Soshanguve, got a back room, that person would still be in business and they would be providing a business case for investment. So we are slowly trying to reevaluate. Perhaps the 20% property allocation can get consumed in the 50% small business allocation as well, because you can't necessarily say a property business is not a business. Otherwise, then we'll have mechanic business, what have you. I assume that's a follow-up. Nahish, I'll just take your second question and then allow you to ask that follow-up before I go to Mokatla, who is our shareholder, Diego, a question that he has posted in the chat box. Ahish, in terms of our process, as indicated earlier, our process is two-pronged. So the first part of the process is that a prospective investee fills in an application form on our website. And that application form primarily measures two things. It measures the size of the market that the investee is looking to participate in, is already participating in, or is looking to capture a bigger size of, right? Are they able to quantify that? And the reason we designed it that way is because we're trying to get the entrepreneur to think of what is it that they're doing. They shouldn't just think that it's an idea, it must get money and what have you. They must link the idea very well to the market that they're serving. Linked to that question is what happens after we give you the investment? What size of the market do you think you're going to capture as a result of our investment? So again, pushing the entrepreneur to think along the lines of capturing this market where they are participating in. The market question is then qualified and probably prefaced, or the question that comes before the market question is a simple one. What problem are you solving? And that's because entrepreneurship fundamentally is about problem solving, finding a gap in the market and then solving it. We're trying to shy away from the type of entrepreneur that says, I'm angry at my boss, I hate my 9 to 5, let me come up with an idea and then get money from these benevolent young Black professionals, and trying to steer them rather to say, identify a problem in your community. Ideally, you should have already had some traction solving that problem, and the money that we're going to give you is essentially just going to accelerate the path of that problem solving. So that is in essence the split as well as the process. I'll give you an opportunity for the follow-up, Ahish.
Thanks, Mo. It's not a follow-up, just more of a comment. I think you're thinking around, letting go of the property side and focusing more on private businesses. It's probably a good thing, because I'm assuming with the numbers you have now, you're not going to get the yield, and you're probably only going to get exposure to residential. And yeah, I think it's a good choice to focus more on private businesses. You have more control there, and the market's probably better than being in property right now.
Okay. And as you say that, I'm just looking to see if all the bankers' hands go up, because bankers love selling property. None so far. Ahish, you in the clear. I'll go to Diego Mokatla. And I think if we can all just give, is it the celebratory emoji? Diego is one of our investors. Obviously, don't track him down and think he's got money. The money that he does have, he's contributing through T1C. Diego asks, can investors identify small businesses which are still in their infancy level to be assisted with being put on business hubs and any other support for them to thrive? Diego, that is exactly what we wish would happen. I used to say at the beginning of T1C, I wish somebody would come, deposit 120,000 Rand, so they are done for their 10 years contributions. Give me a call or give Fortunate a call, because she's our chief investment officer, small business. and say, listen, I've just deposited 120,000 Rand. There are XYZ businesses in my township that I would like to benefit from T1C. And we will work, or we will help the investor to assist the entrepreneur in applying for the money that they've deposited, and then it will ultimately end up in there. So investors can definitely identify small businesses which are still in their infancy, to link to business hubs as well as any other support in order to thrive. I'll repeat, that is the exact thing that we wanted to get by forming this vehicle. Young people that see problems in their communities and say that I will then be part of the solution to that community, to that problem. And not only as an NGO or as an NPO, but as a shareholder, as an investor, as someone who says, if this business fails, I will lose my money. If this business succeeds, I will have the right to enjoy in the celebrations of the success of this hardworking entrepreneur in my community. So that answers your question. Okay, Muribe Obageng says, from my experience, township business owners mainly lack the ability to understand ecosystem and life cycle of entrepreneurship. So how do you go about dealing with that through your investment? I think, Obageng, thanks for the question. From my experience, I don't think they lack the ability to understand ecosystems. I think the very nature of starting something on your own is such that it puts you in a position where a lot of reliable answers and solutions are coming directly from you. Sometimes you'll have been let down. Sometimes you'll have had people that seemed to be promising to offer a solution, but not necessarily so. So it becomes difficult to then create a reliable ecosystem, which is why, for example, we are trying to invest in as many businesses as possible. We have a WhatsApp group where all the investees belong to, and our hope is that they can cross-sell services to each other in that WhatsApp group, put each other on, market each other, and start enjoying the benefits of that ecosystem. I mean, with us, T1C, even with our founding, our first interview was on Ignorant Millennials, a YouTube channel, a young township type startup channel. So the idea is that we can start to better inculcate or better create groups of circles where that dependability can exist. Ultimately, yes, we do see that some type of businesses or some people do have a I will do it on my own type mentality. But the minute you sell to your first customer, you very quickly realize that that's not possible. So those business owners that lack an ecosystem type of mentality, I think most often it's probably us outside looking in. And when we do inquire with that person, they probably have been let down a couple of times. In fact, some are sitting in this session and they long to collaborate with some other people. And you ask there, how do you go about dealing with that through your investment? Yeah, so in essence, it's that. I do repeat, the partnerships that we do look to form with incubators, trying to get our entrepreneurs to be on incubators is something that we are looking into so that they can have that ecosystem type approach. We also do want to use our website to profile that ecosystem. So longer term, we would be looking at putting on different types of services on our website so that even people that don't get our funding, they can at least see other tools that they're able to tap into in that regard. Any more questions? The temptation to put our matriculants on blast. For those of you that have joined late, there was a special mention for the matriculants of Mbalenhle Christian Academy, all the way in Swaziland, and especially Kuye Kwabe, who made a request that we can allow them to join our AGM. And the reason being that they have never had any exposure to an AGM. And I don't know I don't know about you, our stakeholders, investors and investees, but I was on the other side of 25 when I attended my first AGM, and I had hoped that this little gesture can go a long way into a group of young girls in Swaziland being able to say that they now have attended their first AGM. I see a hand from Mr. Pete Rakwale. I'll ask you to unmute and you may go ahead.
Thank you very much, Chair, and I hope I'm audible. Firstly, thank you very much for the opportunity, and I would firstly like to congratulate you and your team on the great work that you've been doing over the years and currently. My question: what type of monitoring processes and support have been set in place by T1C to ensure that this local community businesses actually thrive and grow, which will guarantee possible future returns for shareholders?
Okay. So I'll break your question up into two, right? The monitoring as well as the support, right? And maybe if I am getting you wrong, you can qualify my understanding of the use of your word monitoring, right? So along the way, as we were building this vehicle, one of the guys that we consulted was I think Lebeko. He's the founder of Whoosh Payment Solutions. It won Google's Entrepreneur of the Year, I think 2018 or 19 or so. And I happily mention his name because I enjoy putting on Black businesses even for free. One of the things that he said after we had gone through the entire process, he said, do me one favor. Please don't make Black, intelligent, young entrepreneurs perpetually apply. In other words, an application form that never ends. And I said to him, perhaps could you be a bit clear in that regard? What do you mean? And he said, I've been part of a number of seed rounds and capital raising rounds. And one of the things that happen is that it's almost as if we don't believe in your product. We invest in you because we don't want to miss out. But then we essentially put our hand inside of your business. So at every turn, we're asking you, how far are you? How far are you? How far are you? And indirectly what that is, it says to an entrepreneur, Black or white or Indian for that matter, it perpetually says to you that, yes, we do care about our return, but there is some due diligence perhaps that we missed and we don't trust you. And I think it hits the Black business more often, where you'll find that, first of all, there aren't that many venture capital avenues for Black businesses. And those that don't necessarily exclude Black businesses, when you open the capital book, they've got very low investments into Black businesses, women-started businesses, disabled type businesses. And when you then delve even further into that requirement or into that phenomena, as I will call it, there is this thing where there are many rounds of interviews. So you essentially never get to the promised land. So you are perpetually being evaluated. And number two, when you actually listen, and there's actually a Harvard study when we speak about investments into women-owned businesses as to why the rate is so low for those types of businesses. And the answer that they came up with was, it's not even that they close the door in some instances, but it's the type of questions that get asked to the entrepreneur, especially in panel-facing interviews. So gents would typically be asked the question, paint us a picture of your business. In an ideal world where you are successful, what does your business look like? So that gives me an opportunity to express myself, to dream, to ask questions, to paint a picture of my business and my vision. A very non-binary exercise, a vision ultimately painted tends to be a very good one, you know? And then when they looked at the questions asked to female founders, they asked them questions like, what's your gross profit margin? What are your costs? How long, what is the return on investment? How long until your business is successful? And those types of questions, because they're so technical, they're not wrong. That is a question that I would expect an entrepreneur to answer. But they immediately put you on the defensive, and they essentially limit your answer. So instead of painting me a picture of your dream, you have to quantify your margins, you have to quantify your returns. And by definition, those are finite. That is a long way of saying to you that we trust the entrepreneurs that are able to complete our application form. And on numerous occasions before we launched, we had the conversation, what if Fortunate does not make those phone calls to entrepreneurs? Is our application form sufficient for us to say, anybody that can answer these questions deserves our money? Because we are trying to invest in the space. We are not trying not to invest in the space. And once that's the case, we try and let the entrepreneur run the business as they see fit. As I said, where the entrepreneurs are in need of certain skills that may lie with us, we do try and get them to sign up for incubators and to be exposed to that type of support that they would get. And then the last thing on that, in terms of monitoring, we will try to keep reporting to our shareholders annually. We have made reporting a key part of our business model. We don't want to go for long periods where we are investing and the money is essentially fizzling away, but we don't have an annual type of reporting mechanism. So I hope that answers you, Mr. Rakhwale.
No, thank you very much. I think you have addressed it nicely. Thank you.
Right. I think in the absence of any questions, I will give our Chief Legal Officer as well as our Chief Investment Officer an opportunity to say a word or two so that, yeah, you know, I didn't monopolize the meeting, which I do suspect I have done at this point. I think, and if one of you can perhaps take this question that's coming in the chat box, what is your monetary system? I'm not sure what that means. But, oh, it says, what I mean is, how do you guys get to make money from your investment? Do you retain shares? I think I will hand over to first Nompumelelo, our Chief Investment Officer in that regard, and then to our Chief Legal Officer to say a word or two in terms of the compliances that I may have missed. Nompumelelo.
Thank you, Chair. Good evening, everyone. Fortunate, Nompumelelo. I oversee the investment and small businesses. So to answer Obakeng's questions, yes, we do take shares between 5 to 20% in the business. And the main reason for that is that we are obviously are teaching township businesses that is essentially how business work. When investments are done, we want to partner with them, and hence we take a portion of the business and we become a long-term partner in the business with the hope of getting dividends from that business. And obviously we are an invested partner, and we try our best to ensure that the business succeeds. Hence we plug them into incubators as well as other networks that we have access to. And just I guess my contribution is around the fact that we want to build a network, we want to build an ecosystem. A lot of us who are professionals are exposed to really great opportunities. We learn how to build organizations, and those are the skills that are required by small businesses. And I think essentially the founding philosophy of T1C was around that it would be great for us as professionals to take those skills that we've gained in the workplace and take them into the township ecosystem, and that's the bigger picture, and we'd like to do more of that. However, there are challenges around that, and that is the reason for us now expanding to say what else can we do in the event that Lesegisha is fully employed and he does not have the resources and the time to give in to the township businesses as much as he'd like to. So that's why we've now partnered with the incubators and the business hubs to say that there are resources that are being built towards small businesses, and we want them to plug into those resources and opportunity. But that does not say that if we have investors that have the resources and are willing and available to contribute to small businesses, that door is essentially still open. And over and above that, we're also saying to our small businesses that we might not do this formally, but they have access. They have access to Lesegisha, who is an accountant. They have access to Tokyo, who is a lawyer, and they wouldn't otherwise have access to this types of network. And we encourage them to constantly be in touch and us to constantly say, this is a challenge that I'm facing, what can I do? And we will essentially ensure that we put our resources together to help them. And that is essentially at the heart of T1C. And I think I'd also want to extend my gratitude to our investors, because you guys make it possible. I think I've come to see, and I interact with these businesses quite a lot, and I've come to see that an amount as small as 5,000 rands goes a very long way in a small business that is starting up. It's usually the difference between someone actually going to buy a deep fryer to start a gutter business, and someone staying at home and being unemployed. So that little that you put into T1C every month goes a long way. Sometimes it's the difference between someone closing down their business because they don't have money to go buy potatoes, and that 5,000 rand comes in and it enables them to do that. So what we do essentially is to enable and to create this ecosystem. And I really, really thank you and applaud you all for the work that we're doing. And if we don't do it, banks are not going to do it because they don't understand the township business. They don't understand. To them, 5,000 rands is not going to make a difference to a small business, but we understand that, and only we can stick this out and say, we might not see the returns right now, we might not see the performance, but we have the bigger picture. And if these businesses also don't succeed as we define success, we also leave them we will leave them better. It's not the same as when they wouldn't have done that. So if someone runs that tuck shop for a year, the experience that they take from that, whether or not it fails, that's something that they wouldn't have gotten from anywhere else. So yeah, if we don't do this, no one else will. Thank you.
Thank you very much for that, Nompumelelo. And I think I don't even need to say her heart comes through right there. And I don't even want to mince my words. You know, we've been asked on a number of occasions, you know, it seems like you're just a male team. And I often take offense to that because, sure, we've got the codes that define percentages of males, females, what have you, but sometimes take a move and see what role does that play. And I can tell you now, in T1C, there's not been a single investment that has gone out that has not had fortunates okay. In fact, in some instances, there have been investments where I would have needed fortunate to override my thinking, Tokyo's thinking, and that business turns out well. And it's because Fortunate has got experience. I mean, she was part of building the Awetu. She was part of Awetu. If you know Awetu, the top 50 incubator in South Africa, as well as the SAB incubation hub. She was part of the founding team there. And so there are a lot of millions and billions that are invested from work that came from Nompumelolo's work. And I think for us to have her at T1C, there's not a day that has gone by where we have not felt as if it is an asset. I think it speaks to the question on the foot soldiers on the ground. I think we've got the mind in the organization that makes sure that township businesses are well taken care of. And I think she has done that justice with her contribution here. I'll hand over to our Chief Legal Officer, hopefully not for the boring stuff, before we then close off.
Thank you very much, CEO, and good evening to everyone. There are actually quite a few lawyers who have joined, and I'm surprised that none of them have asked about compliance or any compliance-related questions. But as the Chief Legal Officer, there's a main question that I mainly get asked, and that question is, are you guys licensed? So when it comes to licensing, there are two major legislations that govern that sort of license that one could confuse us as being part of. The first one is the Financial Advisory Intermediary Service Act, so FASE Act. And that basically deals with financial advice. So those companies that provide financial advice or financial products to the general public. So basically, in terms of that act, an individual or company is seeking external assistance from another entity. In this case, T1C, once you become a shareholder, so once you're a shareholder, you are part of the company and the company is then investing. So in terms of phase, it wouldn't apply in this case. Then the second piece of legislation would be CISCA. So that's the Collective Investment Schemes Control Act. So basically a collective investment scheme is a company that's open to the public for the public to invest through that company. But unfortunately, T1C is not open to the public. It's private. You have to go onto the website for you to apply. Once you've applied, you then invited. But then, unfortunately, not everyone makes it through that criteria process because it's quite stringent. There are certain things we're looking for. And then that doesn't make CISCA applicable to us. Although there are other exceptions, but that's the primary exception in that case. And so in terms of compliance, we primarily follow the Companies Act, but then we're also part of the FSCA. So that's the FCA, yeah. So that's the Financial Center Act, FICAS, Financial Intelligence Control Act. So we have registered with them to further our compliance in terms of money laundering and any other sort of incidences that take place within the financial sector, all these scams that take place. So that's to ensure that we are much more solidified when it comes to our compliance. And so therefore, in terms of compliance, shareholders, you have nothing to be worried about. You're sorted in that regard. Thank you. I'll hand over back to the CEO.
Thank you very much for that, Thokozela. I think, again, my team is quite humble today. What he fails to mention is that he has a law firm. So, if you were to be involved in any money laundering, you would firstly have the most to lose in that regard. Tokyo is also doing his MBA at a German university. And the aim of him doing that is to, again, continue to make sure that we are not giving charity in the township. We're not doing anyone favors. These are investments that we are taking in the township. These are entrepreneurs that are the Legaos of tomorrow, the Casper Vests of tomorrow. And nobody has taken an opportunity to invest in them, firstly. And second of all, in instances where some do, it's often done at, a very akshem level. And for me, it says a lot that the team is willing to continue upskilling themselves. I think what I hadn't mentioned is that Nompumelolo is actually fresh from the US as a Mandela Washington fellow, where she spent 6 weeks being guided on how to make community-based businesses more effective. and that sort of engagement. That being the case, I think Tokyo said something quite, go sales, we say, Remona, you are killing our business. He said it's a very stringent criteria to become a shareholder. That is the case in terms of safeguarding our ability to keep collecting capital. However, just to demystify that stringent criteria, in essence, you must just be able to take care of yourself in such a manner that 1,000 Rand a month is not going to be the difference between whether you survive to the end of the month or not. That's our criteria. The way we do that, and I say this for the benefit of people that may not qualify, maybe you aim to qualify in 2 to 3 years' time, or you've actually always wondered. When people say I'm financially literate or I've got my financial affairs in order, what do they speak of? We ideally are looking for shareholders that have got a pension fund. Hopefully you've got a tax-free savings. That is government saying to you that we're not going to tax you on this money. And an emergency fund. So if my tire bursts today, I don't go and phone the CEO of T1C and say, give me my 1,000 Rand back. I just happily run to Capitec, FNB, Investec for some in this call, withdraw my 1,000 Rand and fix my tire. That way I can offer the entrepreneur that I've invested in the full 10 years use of my money without being worried. Typically, as we log off, we have discovered that that is roughly someone earning about 25,000 Rand with a disposable income after the initial deductions of about 19,000. And then after you've paid your groceries, paid your mortgage, paid off your apartment, what have you, you essentially have got about 3,000 to 4,000 Rand left over as, what do we call this, as discretionary spending. And of that discretionary spending from Groovo and what have you, we then say that 1,000 Rand of that is what we require as an investment. So 100% stringent. I saw the statistics of how South Africans are doing, and we're very sensitive to that. But equally so, on the other hand, it defines the best of what we would like to see happening in the township. We would like to see those that have managed to get a certain leg up be able to give back and facilitate that essentially that sort of vehicle and sort of exercise. I'm going to close off the meeting by reading a message from one of our founding 7 in that picture that we started with, and Njabulo Cele. Njabulo Cele was our CFO for a while, and he gave selflessly to that to this cause, such that some of the key features of the presentation, in particular, the net asset value per shareholder, as well as the pie chart, was an invention of his, and we carried it on because we felt the quality of information it gives is one that directly speaks to you, the shareholder. Njabulo says, well done, T1C team. Incredibly impressive work over the past few years, giving away his age as well. Looking forward to seeing the company grow and to you creating more entrepreneurial success story. 100s. And we appreciate that, Njabulo, as well as the work that you have done. In closing, I think on that Njabulo note as well, for investments that ultimately are bigger than 25,000 Rand, Njabulo has got an investment team that has said any investment that you guys are not able to make as T1C, bring it over to my friends, my CA friends. There's about 5 to 7 of them, and we will happily take a look and put aside even more than 1,000 Rand to invest in those type of businesses. So speaking to that ecosystem that was mentioned earlier, that already there are spin-offs, I think that concludes our AGM as well as our question and answer session with you, our shareholders, with you, our stakeholders, and in some instances with you, our entrepreneurs. I'm Lesegisha Mthiyane, and I will close off with our slogan, which was crystallized in July last year when there was panic in the markets. I had our board members calling us and asking us, what's your take on what's happening on the ground? The marketer was saying, want to finalize the slogan, what should we say? And through that horrendous time in our history as a country, you know, people choose to see it as looting. And I think that was one of the times where we witnessed what actually happens if people are not empowered over a long period, such that they don't have an outlet through which to let out that frustration. And that's where it got crystallized. When everybody was exiting the township, when everybody was saying the president must come on and give his famous family meetings, it hit us that the letter that we are going to write to our shareholders is that we invest in township businesses. And come what may, what you will find us doing, no matter the situation, no matter the weather, you will find us investing in township businesses. And I think that has spoken to even the questions of why we don't hire people on a full-time basis and what have you. We don't want money going to our Mercedes-Benzes as young professionals. It's fine. Corporate will take care of that. We invest in township businesses. Good night, everybody.